Good morning, everyone. This is Kim Schmidt, Associate Editor for Rural Lifestyle Dealer Magazine. Welcome to our latest webinar. I'm joined today by Managing Editor Lynn Woolf, who will be presenting some insights and analysis on Rural Lifestyle Dealer's 2016 Dealer Business Trends and Outlook Report. Thanks again for joining us. Let's hand things off to Lynn now for a look at the report.
Good morning, everyone. Thank you for joining us today. We're very pleased that Rural Lifestyle Dealer Magazine is celebrating our 10th anniversary this year. We hope you've had a chance to read our winter issue with some great stories, kind of with a look back as well as a look ahead. Our goal today is to give you additional data and trends from our 2016 Dealer Business Trends and Outlook Report to help you compare with what other rural lifestyle dealers are seeing for 2016, as well as to help you tap into some growth opportunities that dealers are identifying. Just to get our bearings on where the market is, my first report for the magazine was back in winter of 2013, and you may remember the words fiscal cliff. We were just had just gotten past a presidential election, and a few years past the housing market crisis. So some things were stabilizing in the market and looking good. At that point, Dave Pinnicky, our executive editor, talked about most dealers, though cautious, see solid prospects in the year ahead. The forecast then for 2013, 44% expected a little to no change in revenue, about 40% expected increases of 2 to 7%, and about 6% expected increases of 8% or more. So you can see that good outlook then in that cautious time frame, and you'll see in just a few slides on how that outlook has grown even more positive over the last few years. And in terms of who you are and who our readers are, you can see from our demographic survey here that about 50% are in management and ownership. And for us, that means that our readers have a solid handle of their numbers and forecasts that they're sharing with us. And about 70% have revenues about 2.5 million or more. So good-sized dealerships within our market. Looking at who responded to our 2016 survey, you can see the majority are from the U.S. We surveyed dealers across North America, with about 90% being from the U.S. And a good share are considered smaller stores, with about 80% having 1 to 20 employees. But you can see 20% having that good size, mid-size level of 21 to 40 employees. Our readers are experts in the market. As you can see here, about 60% have been serving the rural lifestyle market for 16 years or more. And that was, really early on in the segment, when probably even the term rural lifestyle was still being defined. So a lot of good experts out there. But then you can see too, if you look at the 1 to 4 years, there's new dealers coming on, at 12% serving the market for 1 to 4 years. So we've got a solid base of experts out there with a lot of newcomers as well. The market is very strong in terms of growth. Our readers told us in the last 5 years that 16% of our readers said that their market has grown 20% or more in the last 5 years, and half said that the market has grown 5 to 19%. So that's very strong growth, especially when you look back at those numbers being repeated over the last few years. So to have 16% growth, or 16% saying 20% growth on top of similar numbers last year, is a really good indicator. In terms of our survey and the brands represented, you can see the main compact and utility brands were represented across the survey. The majority, 31% of Kubota respondents, but a good mix with John Deere, Massey, Ferguson, Case IH, and New Holland. Good representation also in terms of the zero-turn mower brands represented in our survey. Toro and Kubota, about even, 23% for Toro and 22% for Kubota, and then a good breakdown as well as in the top 5 with Cub Cadet, Exmark, and Husqvarna. When we look at the data, we also look at the backdrop of what's happening in the economy and specifically the influencers for the rural lifestyle market. And of course, unemployment is something we look at. It was 5% in January. It's 4.9% currently. And really throughout all of 2015, it was really close to that 5% level. And economists generally consider that level a fully employed economy. So that's a good indicator for our market. We also look at home building, and I watched the National Association of Home Builders Wells Fargo Index, and they have lately the builder confidence was at 58, with 50% being growth neutral. So that's also a good indicator, and that number has been holding about steady, varying just a little bit, but pretty much in that level. And then I also look at something called the Rural Main Street Index, and this was Dr. Ernie Goss's report. He's with Creighton University, and this just provides some good insight in terms of the influence from the ag production market. In this survey, it's based on community bank presidents and CEOs in 10 states across the Midwest. So you can see the influence from the production ag market. 40.2 in March, with 50 being growth neutral. That's up slightly from the 37 in February. So that's definitely indicating what you all know in terms of what is happening in the production ag market. If we look at, in terms of our readers and how their markets break down, you can see that hobby farmers and production farmers are about equal, 26% to 27%. And that's in terms of revenue. And that is a change from last year. Last year, the hobby farmers was about the same, it was at 27%, but our readers said that 41% of their revenues came from production farming segment. So again, you can see that influence from that down production economy, but the importance of the rural lifestyle market in trying to make up some of those revenues. And then the other big markets for our readers are the turf, lawn, and landscape contractors, accounting for about 20% of revenue. And of course, weather is a big influencer there, and we'll be watching what happens throughout this season. So here's what you're told us for this year. If we look at your forecast for 2016 versus 2015, 13% of you expect growth of 8% or more, with nearly half expecting growth of 2 to 7%. And if we look at just last year, 8% of you expected growth of 8% or more, so that's up 5% this year. And 40% expected growth of 2 to 7%. So that compares with 50% last year, so this year. So you can see the positive outlook that was last year is even more positive for this year. So words like upward trend, opportunities, I think are all good descriptors for what's happening in 2016. And really, I think many industries would like to see this level of optimism as well as this level of growth. The optimism also carries over into the aftermarket revenue. You can see that dealers are just as positive, with about 9% expecting growth of 8% or more, and about 54% expecting growth of 2 to 7%. And when we look at it last year, the top level of growth, 8% or more, is about equal, 9.1% versus 9.4% this year. But there's a bigger growth or a bigger jump in terms of that moderate growth of 2 to 7%. It was 46% last year, expected growth of 2 to 7%, and we're up to 53%, almost 54% for 2016 in terms of that moderate 2 to 7% growth. So you can see good forecasts both on the overall revenue as well as aftermarket revenue for 2016. And One thing just to note is that this optimism, as I mentioned from that 2013 report, it's been carried over from year to year. So when you look at that growth from year to year, that positive outlook being built on positive outlook from the previous year, that's a significant upward trend. Now looking more closely in terms of product lines, you can see that zero-turn mowers tops our top 5 list. 70% of you expected 2 to 8% of revenue growth over last year. And zero-turn mowers over the past few years have just really been the perennial leader at topping that market. It's really driving revenues for you. And your manufacturers are agreeing on that because there's definitely more models out there, as well as even new entrants into the market. One product category in this top 5 list that stood out was chainsaws, with 53% of you expecting growth of 2 to 8% or more. And that's up from where chainsaws have ranked in the past, and generally it's more maybe in that top 10 or 12. So it's really jumped up this year, and I'd be interested in maybe some anecdotal thoughts on that. It might be related to the new battery-powered models out there that might be generating interest among dealers for new ways to sell, as well as among consumers who are looking for some of those kinds of options. And also lawn tractors, lawn tractors ranked higher this year in the top 5. So that mowing segment is very important for revenues for rural lifestyle dealers. In terms of products that you're adding, utility vehicles top that list, and it also is a category that's been topping the list for the last few years. So dealers are continuing to add that category to their lineup. You can see the other list here with tractors being really a perennial product that dealers are adding. 35% are adding under the 40 horsepower, and about 19% are adding 40 to 100 horsepower. Again, you see the zero-turn mowers, number 3 here, so 25% are adding to their lineups. And then skid steer loaders as well at right about 24%. Yeah, some of that influence is, of course, from manufacturers and what they're offering in terms of new models or new product segments. But also, I think it just shows the importance of these core products to dealers and in terms of offering what products are in most demand. We did look at the top 10 list. You can look at our winter issue for some of the categories that goes down to 26 categories. And snow removal equipment and ATVs made that top 10 list. And that's also just indicating dealers filling out their product lines, trying to get every customer and every sale they can get to make sure that they have the inventory that people are looking for. We asked about rental. Last year was the first year that we asked about rental, and we're going to keep asking about it and learn more about it because it's becoming a very good revenue source for dealers. About 40% of you say that you have a rental department. You can see the ranking here in terms of the products being rented, with skid steer loaders being number 1, 54%. Again, zero-turn mowers showing up as number 2 there at 46%. And then you can see the other categories of equipment with tractors, tillers, backhoes, rotary cutters, post-hole diggers, generators, and power hand tools. So that shows the influence, I think, in terms of the commercial contractor and some of the equipment that they might need for either light construction or for landscaping. So there might be some opportunities there if you look at that list in terms of what you might be offering for rental and what you may want to add to your rental offering. We looked at the optimism of large versus small dealerships to see across the rural lifestyle segment whether there was any difference. And we do see some more optimism on the smaller end. when we compare growth, the larger dealerships say 43.4% for growth of 2 to 8% or more. And smaller dealerships, if we combine those two top numbers, 64.7 expect growth of 2 to 8% or more. And you can see even on that top range with the smaller dealers, nearly 15% expecting 8% or more compared with almost 7% for the larger dealerships. So there's tends to be some more optimism on that smaller scale. It might be related to maybe the production ag segment factoring in more on the larger side, but there is more optimism among our smaller dealerships. We looked at the optimism in terms of aftermarket revenue and large versus small dealerships, and that also carries through from the overall revenue. If you compare growth, large dealerships, that was 21 or more employees, 56% expects growth of 2 to 8% or more, and that compares with 64% of small dealerships expecting growth of 2 to 8% or more. And then they're about matched. You can see on the charts here on the upper end, 9 and 10%. But when you look at that 2 to 7% or more, the smaller dealerships are ranking higher with 55% expecting growth of 2 to 7% compared with 46% for dealers 21 employees or more. We looked at equipment type in terms of how that might rank differently among large and small dealerships. And the zero-turn mowers, you can see, is just tops for everyone. And it's top, maybe the top 5 for large dealerships as well as small dealerships. You can see some of the difference. The small dealerships may not be carrying the tractor lines. They're not showing up at all in the top 5. And then you can see where chainsaws, again, are ranking very high for the smaller dealerships. And skid steer loaders are showing up for large dealerships, but not small dealerships. But you can see the lawn tractors are also high for both. So that, regardless of size, regardless of revenues, the mowing segments and zero-turn mowers are really driving revenue. We looked at optimism based on brands to try to highlight any trends there. Massey Ferguson came in as the top for total revenue. And when we looked at aftermarket revenue, John Deere came tops there. The biggest shift was that Massey Ferguson coming in at number 1 for the total revenue, but number 5 for the aftermarket revenue. And John Deere was number 1 and 2 for both. And then you can see kind of this different positions for Case, New Holland, and Kubota. Excuse me. We also looked at brands in terms of how dealers of different brands are adding to their lineups. You can see the breakdown here. For Massey Ferguson dealers, about half of the respondents are adding tractors and UTVs. John Deere, 75% of dealers are adding tractors under 40 horsepower. Case IH, UTVs and backhoes, at about 38% of dealers. New Holland, very strong with 80% adding hay tools. And then Kubota, again, a strong almost 62% adding skid steer loaders. There was some influence in those answers based on new products being added by the manufacturers, but it is interesting to note in terms of the just the variety in terms of brands and what they'll be emphasizing this next year. We asked you what you were most concerned about for 2016, and finding good employees is your most concerned about, 54%. And that has really been the last few years. It's just been an issue for dealers across North America. Some of the underlying factors that affect that have been changing. You know, there was the oil boom that we're taking employees away, and that has subsided, but it just doesn't seem to matter. It's just a major issue for rural lifestyle dealers. A low sales margin is, excuse me, is also something that continues to be a concern on the whole goods side, definitely. And healthcare programs and costs, with 42% showing that is the top third most concerned about issue. So those three are really perennial issues for rural lifestyle dealers. One big change that you told us in terms of your concerns, and this is equipment shortages. You listed it as number 4 in 2015 and number 10 for 2016. This could be related to, there was a lot of news in the last few years about expanded or new distribution centers. AGCO, Mahindra, Hustler, Steel, Bobcat, Kubota have all announced improvements in that area, so that could be making dealers feel less concerned about some of those shortages. We asked dealers some open-ended questions in terms of, you know, besides the numbers, just really what was on their mind related to growth in the year ahead. And this point from the Massachusetts dealer was really representative of a lot of you. Help in the parts department. He's concerned about service techs going forward as current employees age out. A lot of dealers had comments that were related, definitely had repeated that, you know, throughout the answers. A Maryland dealer talked about just kind of the image for the career, currently not being viewed as a career choice. It's interesting when you look at some of the outlooks out there about opportunities for the ag market, and there's a lot of jobs being listed, a lot of big growth in terms of, you know, FFA and careers in ag, but I think dealers are concerned that maybe those are not related to jobs in dealerships, maybe more in the corporate world. Also, people did chime in just about regular business issues, cash flow, the problem that we talked about earlier with low sales margins, and a lot of dealers are talking about, you know, building margins through the higher margin areas like service and parts. We did have one dealer who talked about, you know, maybe it was time for him to reduce some brands to increase profits, that the margins were too low to carry a good amount of brands, too much administrative expense. We did ask last year in terms of that, you know, concerns about manufacturers, and the idea of administrative expenses came up last year with training and some other requirements from manufacturers. So dealers are looking for ways to really kind of streamline and make more money on more higher margin areas and reduce administrative expenses. We asked dealers what they were doing to stay sharp and build their leadership skills. We've got a mix of a lot of different answers because we had a lot of different answers from you. A good share are relying on your manufacturers, of course, and the dealer groups that are being offered through your manufacturers. Many also mentioned about the dealer groups, the peer groups and mentor groups being offered through companies like Bob Clements and Jerkins and Spader. So people are really turning to other dealers to learn what's working for them. And then there's just really kind of a whole mix from there, everything from you know, the New York Times to LinkedIn articles. So from service agency, USDA. So really dealers, I think, are doing a really good job trying to find information wherever they can get it and to build their leadership skills from whatever experts they can turn to. Other trends we're watching for 2016, and this is based on our coverage this past year as well as trade shows that we attended. GIE is a big show that we watch for what's being introduced there. It was interesting, again, with that evolution of the zero-turn mower. Ergonomic designs were big this past year. Suspension seats, there was a lot of talk about suspension seats and just the overall ride. And with UTVs, in the last couple of years, there was a lot of entrance in the UTV market, and there still is. But now there's enhancements in terms of seating configurations, being able to customize seating, being able to change cargo, and how you carry tools. So a lot of enhancements being made on that mower and UTV segment. EFI engines continue to be, excuse me, a big entrance in the last few years, and in terms of the cost savings with EFIs, and also, again, the battery-powered equipment. It continues to be a big topic with outdoor power equipment, with the battery-powered equipment for the commercial level user, and consumers turning to those commercial level battery-powered equipment. And we're also, one thing we are looking at in terms of the idea of data in the experience, data in terms of how the mower might be operating, and some early warning signals for users. It kind of comes back to this whole idea of who your customers are and how they're operating in the rest of their life. And there's a lot of our world is related to the whole app experience and having data and customizing your experience. So I think we'll continue to see that moving forward. And all of these new enhancements are great ways to have new discussions on existing products with your dealers or with your customers this spring. So we've talked about the economy, which is good. We talked about the outlook, which is very good, and the equipment that you're going to be adding. And our full report, which you can have access to, breaks down that data even more based on brands. And we wanted to talk now in terms of, okay, so there's a good outlook out there. There's great equipment, more equipment coming, and what can you do about that? And the big thing is the brand, both your manufacturer's brand and your dealership brand. And we ask dealers about when customers come into the store, do they have a specific brand or unit in mind? And you can see that they do. Dealers say that about 45% of the time that customers have a brand in mind most of the time, and 10% of the time they have a brand in mind almost always. So roulette sellers are doing research before they get to your dealership. They know what brand they want definitely because they're coming to you. They probably also know what type of equipment they want, and that I'd be interested to hear what you think. But is that halfway to a sale if they come in with that much of a decision in mind? And then really the clincher is for you is that you're experts on staff. Once they're talking to your salesperson, they're trusting you. Nearly 7 out of 10 are accepting your recommendations, and 16% are almost always accepting your recommendation. So that really is something to share with your sales teams in terms of the level of influence they have. They see your salespeople as representing that brand that they're trusting, and then they're also trusting the salespeople expertise. And so that's just a really good setup for long-term relationships. In our, in our 10th anniversary issue, we also looked at, like I said, a look back as well as a look ahead. And we asked our column experts to weigh in on what they think dealers need to do in the next 10 years to succeed. And Bob Clements, who writes our Achieving Peak Performance column, he's a nationally recognized dealership management consultant. He talks in terms of people, consumers being not brand loyal, but people loyal. And so that's really pushing, he's really pushing the idea of the influence of the dealer, which also came out earlier with the statistics we saw. He's challenging dealers to think in terms of not having your customers wait in line, that the line is barring dealerships from talking to your experts. And he talks in terms of that kiosk experience, and we've talked about that over the last few years. And dealers have added that in terms of having kiosks for consumers or customers to further research equipment when they're in the store to help if some salespeople are busy. But excuse me, Bob is talking about taking that even a step further, and that having people purchase at those kiosks just like they do it today at the grocery store, the self-service checkouts. So it's just the idea of giving customers control. They want that control. They want to be able to use the technology to get what they want. So look for ways to add that to your dealership. He also talks about the need for a different kind of technician, and that the engines are changing, so your technicians should change as well. Continue to work on being more tech savvy. Also, in terms of the idea of the expert, it's the importance of having someone on your team, the service team, who can interface with customers and explain what's going on. It doesn't matter that they don't understand everything a technician is saying. What they want to do is hear it and learn it, and feel that trust. I did visit a dealership recently where they had what they call a safety zone in their service department. So it was a way to bring customers into the service department, be cognizant of machines there and people working, but have this zone for the technician to come over and meet with the customer. So it's, again, that idea of control, interfacing, relationships will be important in the next 10 years for dealers, just like they always really are. Lisa Bachlich from Osborne Barr, our marketing expert, she talks about the core elements, and again, this is the basics that everybody should be doing, but you have to adapt it in the new market. With audience, the idea of knowing who your audience is, who your customers are. If you don't have a customer relationship management in place to track those customers, find ways, find Excel spreadsheets, something to track and know who your customers are, and to be able to break them down into segments. And then from that point, once you know those segments, fine-tuning a message for them that speaks directly to them. Timing, of course, is important with any kind of a marketing message, but the idea is, timing based on peak season, and also based on timing on when people are open to those marketing messages. For instance, on social media, understand if you're seeing better engagement in the evening, that's the time to be engaging with your customers there. It's, not really 24/7, but there are ways to be 24/7 in terms of some social media and being ready for when your customers are coming to you. In terms of delivery, mobile data, is more important ever than ever. With video, you can see the statistic here from the Ericsson Mobility Report that video will constitute 70% of all mobile data traffic by 2021. So if you aren't looking at video yet in your dealership, you really have to be looking at that. Our retail expert, Mike Wiles, talked about 8 ways to grow in the next decade. He also talks about video and the importance of video. He'll be presenting a column in our spring issue about that, and you can see his website at the bottom there and look at how he does video. You don't have to be a video expert to be sharing information with your customers. Excuse me. He's also talked here in terms of the top 8, in terms of the idea of succession, and that definitely with the age of dealers, that succession has to be on top of mind, but it doesn't necessarily have to be right now in terms of ownership. But the idea of that you can have succession based on empowering people, You can build in succession with things like an employee stock ownership plan. So just new ways to think about the legacy of your dealership and how to keep your dealership strong while you're still working in the dealership. And then also he just talks about the idea of the challenges of being an owner and find ways to get out of the dealership. And I think that, that ties back to some of the leadership topics we talked about earlier. You can get out of the dealership, still be connected to your dealership by looking for ways to network some of those other business groups. So really kind of strengthen your own self as a business leader and get energized in new ways. And his number 8, the fire customers that you can't make happy. You all know that you put a lot of time into customers that just don't work. And so as you look at your customer relationship management system, or as you look at and talk to your salespeople about some of their customers, have some plans in place for some of those customers that are just draining you. In terms of the best, our 2015 dealerships of the year, which we announced in late fall, Mike Kelly, Kelly Tractor and Equipment of Longview, Texas. He was our single store recipient. And here's a quote that really summarizes his story. He said, "It really came down to deciding that we're in business to stay in business and not just to survive. How are we going to do that?" And what he had to do was his market changed. It changed from being production agriculture to being a rural lifestyle market. So he really had to rethink what his dealership was. And he's had tremendous results. The single store dealership has 15 employees, 3 of whom handle sales, and their 2014 revenue was $10.2 million, and that was $4 million higher than the previous year. So obviously the changes he made, those drastic changes, worked for him because he responded to what was happening in his market. And you may want to check out his website, kellytractor.net. He just launched a new website, and you can see the emphasis that he places on his people and positioning them as experts. Prairie Coast Equipment up in Alberta and British Columbia, they are a multi-store recipient, and they knew that merger was necessary for them to succeed. It was an idea that was brought to them, an idea that they had to think about for a while, and it's really led to them having tremendous growth. But Dennis Landis, the CEO, brings up a really great point in his story, where he talks about having the flexibility or openness to say, what does double our size look like? So in the next 10 years, it may not be about just adding one more store, but how can you double? So if you're staying at a single store, how can you double your revenue? So that's a big challenge for dealers of any size, but really something to consider to really break out of the box and think about the next level for your dealership. And that's what I have in terms of right now for the data and trends. I would be happy to send you the full 40-page report. You can see my email, lwolf@lassetermedia.com, and you can drop me a line after the webinar. We do have our winter issue up, so you can see some of those other stories that I talked about, as well as there's an enhanced visual content where you can dig deeper into more trends and some open-ended questions that our dealers responded to.
All right, thanks, Lynn. That was a lot of great information. We've started to get some good questions in, so we'll jump into the Q&A portion of our program. First off, could you, do you know what the breakdown of respondents from large versus small dealers was for the survey?
I don't know it offhand. I can gather that data. I just don't have it right at the top of my mind here, but I'll make a note.
Okay. And then related to that, what are some challenges and opportunities for dealers as they transition from being a smaller dealer to being a larger dealer organization?
Excuse me. Well, I think really, as we saw for the top concerns, employees seems to be the biggest issue, regardless of whether you're small to large, growing from small to large. I think there might be ways to look at how you view employees. I know in terms of the corporate world, there's a lot of talk about millennials, those who are 18 to 33, and how millennials work. They're looking for different types of work arrangements, open spaces, telecommuting. Those things may not exactly be a fit for your dealership. You need people in the store, not telecommuters. But is there a way for your dealership to adapt? Is there more flexibility, for example, on your sales team to try and attract that millennial crowd? So that seems to be really the biggest challenge. The biggest opportunities we're hearing from dealers, are on that service side with that those higher margins. And so as dealers either look at change up of their existing dealership with their employee base, or as they grow to a larger dealer organization, it has to have that emphasis on that service and parts for those higher margins.
Okay, and then do you have any information on what the short line market looks like for the year?
Excuse me. Well, we break out the product categories with 26 product categories. So the top 5, as we talked about earlier, were kind of products being dominated by the mainline suppliers. But if you go to the magazine and look at the list, you can see things like, if we look at like tillers, they ranked number 13 of the 26, with 22% of dealers expecting growth of 2 to 8% or more. Just looking at some other categories, sprayers ranked 17th, with 16% of dealers expecting increases of 2 to 8% or more. And just another one for comparison, fertilizer spreaders ranked 19th, with 14% expecting sales to increase 2 to 8% or more. So those other categories may not have those big numbers in terms of the 2 to 8% or more growth, but you can see if you have those lines that are expecting growth of 15 or 15 to 20% of dealers are expecting those strong increases. Your short lines are looking good too.
Okay. And then in your presentation, you talked about how finding good employees is a top concern for dealers, and also how there's a need to educate young people about our industry. Have you talked to any dealers that are doing a particularly good job of educating younger people about the opportunities in this industry? Are relationships with high schools or colleges working for dealers? Do you have any insights there?
Yeah, I think that comment there just about the high schools, it really does need to start earlier, earlier than those technical colleges. So there are some dealers going into high schools. And there's just a lot of different ways to do that. I mean, there was always career days. You can always offer up tours. You can offer scholarships. So it really has to do with building your brand, your dealership brand within your local community. So, you're a major employer. You're, something that they see when they're driving around town. Find ways to get into the schools however you can and offer that. It may be just on some related topics, not always pushing your dealership. For instance, egg safety is always an important topic, especially this time of year, and again in the fall. So look for topics where you're the expert on, and then find ways to present that to young people.
Okay, and then in the survey, we talk about the less than 40 horsepower tractor range and the 40 to 100 range. But do you have any insights on what the overall outlook is for the under 80 horsepower tractor sales for the first quarter versus last year?
Excuse me. Well, not for that breakout, just because the numbers are generally nobody has a forecast for that strictly under 80 horsepower. The breakout is 40 horsepower or less, or that 40 to 100 horsepower range. And it looks like for the overall, for the under 40 horsepower range, it's a growth of about 4%. It's not as good, it's about flat for the 40, 100 horsepower range. And generally the influence there might be the livestock segment, which has fallen off. So they're the users of that 40 to 100 horsepower range. So we can't share those numbers at plus 4% for the under 40 horsepower and about flat for 40 to 100.
Okay. And then do you have any information on what the value of the rural lifestyle market for equipment in the U.S., Canada, and North America are, whether that's past, current, or projections for the future?
It's a very good question, and that we don't have data on. The market is really very diverse. It's very fragmented in terms of defining who is a rural lifestyle dealer, what is rural lifestyle equipment. Generally there's, compact tractors, of course, and lawnmowers and tractors and things like that. But how do you really define that? How does the dealer themselves define them? So that's really the challenge in terms of identifying the value of the market, and that there's a lot of different definitions for what the market is. We do have some numbers that we watch in terms of production farm machinery. The market is at about 103 billion. Obviously machinery is huge, but I don't have a breakdown for the lifestyle market.
Okay. And then in the report, we look a lot at the forecast for the year ahead versus last year. Do you have any info on what the forecast is for 5-year growth for rural lifestyle dealers?
I think maybe one way to look at that would be to look at how they've responded and how their market has changed in the last 5 years. So we shared earlier that 16% say they have growth of 20% or more. In the previous year, 13% said they had growth of 20% or more. So if you look at those numbers even in the last 2 or 3 years, if you look at the economic factors, if they hold steady, so if employment stays about the same, if housing growth stays about the same, I think you can kind of extrapolate where things might grow in the next 5 years based on those numbers.
All right. And then kind of looking at that same 5-year timeline, what is the percentage of change in the last 5 years in the rural lifestyle market compared to the number of working farms that have been lost in that time?
Another good question, another complicated question. I think a lot of it has to do with there, not being a direct correlation, I think, between farmland and rural lifestyle market. As farmland changes, it goes a lot of different ways. Maybe the focus is shifted from a traditional farm to a rented farm. Farms been split up, with some being production ag, some being rural lifestyle, some being small ag. So it's really hard to do a direct link between farmland being lost and the growth in the rural lifestyle market. There's lots of numbers out there. If you do just some searches on USDA, the land in farms, 912 million acres, was down 1 million acres from 2014. But there's no data to really say how those 1 million acres were then used. We do know that farm numbers are also down by 18,000 farms during 2015. So, we all know what's happening out there in terms of farmland declining, but it's hard to say in terms of how it exactly goes into the rural lifestyle market.
All right. And we touched on this a little bit earlier talking about the short lines, but could you address how the sprayer business is doing and any trends you might be seeing with those products?
Well, if we look at So if we looked at how the sprayer market ranked this year, so in terms of product lines with the most potential to increase revenue, it ranked 16 out of 26. So 21% of you expected growth of 2 to 8% or more. It ranked number 14 in terms of product lines that dealers were adding. So 11% of you were adding spraying equipment. If we look at the report from last year, spraying equipment in terms of potential for increasing revenue, it was 17. 16% of you expected growth of 2 to 8% or more, and it ranked number 20 in terms of product lines being added, with 4% adding that product line last year. So there is some optimism showing up in that particular product category.
Okay, before I get into this next question, I'd just like to invite everyone, if you have any questions, to send them in at this point. We're going to wrap up shortly, so kind of a last call for questions. And then, Lynn, what's the biggest issue that both manufacturers and dealers are going to face in the next 6 months, and how is that going to impact marketing decisions?
Well, I think based on what dealers are talking about with being most concerned about, again, those employees, manufacturers are only as strong as how strong their dealerships are. So that employee issue really has to be worked. And then the idea of low sales margin, and again, that relationship that manufacturers have with dealers and in terms of the whole goods, and just some of those margins that are having to be made up in the parts and service department. So in terms of impacting marketing decisions, if dealers look to promote their parts and service more than they have in the past, or at least promote it as much as they promote their whole goods, might be a way to address some of the issues.
Okay, and we've seen some growth in the rural lifestyle market, but it's said that the number of dealers is shrinking. Is that a trend that you are seeing continue?
Well, it's definitely a trend, in terms of what it seems to be happening on the production ag side. I think it's probably a question that's situational. Everybody has an opinion on it, based on what's happening in their own backyard. So, I mean, it would have some influence because our dealers do carry production ag equipment as well, many of them. So, there is some influence, but it's really, I don't have numbers that we're tracking in terms of the number of dealers that might be shrinking on the rural lifestyle side. As you can see from our numbers, our dealers are strong even at single stores. So they're doing well regardless of whether it's a single store or multi-store, and kind of those trends.
Okay, that's all the questions we've had come in. So thank you to everyone who submitted some. Today's presentation and audio will be made available on the Rural Lifestyle Dealer website in the event you'd like to go back and review it. Keep an eye on your email and the Rural Lifestyle Dealer e-brief newsletter for more information. On behalf of Lynn and the entire Rural Lifestyle Dealer staff, thank you for joining us for today's webinar. When you leave the webinar, a short survey is going to pop up. Please let us know what you think of the live event, and if there are any other topics you'd like us to cover in future webinars, please be sure to let us know. Thanks again, everyone, and enjoy the rest of your day.